Joining me now is Rudi Fronk, Chair and CEO of Seabridge Gold. Great to see you, sir.
Good to see you again, Mark. Thank you.
Now, Seabridge Gold is a very well-known name in the resource sector. You're a well-known name, but I think it's worthwhile to refresh everybody's memory about the business model at your company, because it is unusual, it's unique, and not everybody does it. Very few people do it. So you co-founded in 99, and you've built up the largest amount of reserves and resources pretty well anywhere in the world in gold, silver, and copper. And the whole objective is to grow reserves and resource ownership per share, correct? Is that how you'd sum it up?
That is correct.
Yeah.
If you look at our industry, allocation of capital is not well done. Dilution is at the forefront, and it's not just the junior sector, it's the seniors as well. Our concept was to build optionality and leverage by simply growing ounces of gold in the ground faster than shares outstanding, and we've delivered on that.
And so why don't more companies do this, do you think?
Because it's hard.
Yeah? Okay. And that's it?
No, I think you need the right market. We tend to do our acquisitions at market bottoms when you can buy assets very cheap. A great example of that is our KSM project in British Columbia. Placer Dome had spent over $25 million on this project. They walked away from it, and we were able to buy it in the year 2000 for $200,000. So they misallocated capital. We took advantage of a down market, and now have grown into the largest undeveloped gold and copper project in the world through exploration, engineering, and permitting.
And you're looking for a JV partner at KSM? Is that in the works, or how close would that be?
It's going to happen.
Yeah.
It's going to happen hopefully soon. We've been talking about a joint venture for a number of years. We've been continuously de-risking the asset to make it more attractive. We're now at a point, though, where we're ready. There's very few companies in the world that have the technical, financial, or social wherewithal to build a mine the size of KSM, and that's what we're focusing on.
Okay, very good. Now, at Courageous Lake in Northwest Territories, you come out with a new 43-101. The previous one was from 2012, so a lot has changed here. You've got a new PEA. You believe that you could expand the open pit beyond the 24 mine plan, and just looking at the numbers, big improvements right across the board in net present value, CapEx, internal rate of return, and so on. So can you sort of sum up the highlights of that and what you're doing?
Yeah, I think the three reasons why it looks so much better today versus it did in 2012. We simplified the mine plan. We shrunk the size, so less capital going in for throughput. We also have a weaker Canadian dollar today relative to the U.S. dollar. When we did the original study in 2012, the Canadian dollar was at par with the U.S. dollar, which is not good for Canadian assets. And then gold price. I mean, back then we did our original study at $1,380 gold. Today, gold above $2,000. It just generates a very, very different project.
Right. Now, in terms of you've seen many different cycles, good and bad, in the gold sector. We know we're at a low point now in terms of the equities. There's a disconnect. The gold seems pretty comfortable above 2,000. So how would you compare the current cycle to previous times, let's say 2015 or so, and before the big run-up in the early 2000s?
I think the difference this time is the physical metal relative to the gold equities. Yeah, 2015 was a tough market. Gold had gone from 1,900 to 1,050. Gold equities got slaughtered. We're now looking at a gold equity market that's in the tanks, but the gold price has held up remarkably well. I mean, gold's here above $2,000 an ounce. Gold equities are at multi-year lows. I think the big change right now is the demand for gold relative to gold equities. You have all these nations that want to get out of the U.S. dollar that are now actually buying physical gold through central banks and others, and that's putting a bid onto the gold price and making it go higher, whereas those investors don't buy gold equities. On the other hand, the Western investor is dumping everything gold. If you look at the physical gold holdings of the ETFs, it's way down. Gold ownership through equities is way down. So the Western investor has left the space. The Eastern investor is buying the physical, and that's why you have this disconnect.
So where are those Western investors going, especially at the retail level? Is it into technology and NVIDIA and Bitcoin and that kind of thing?
Formula 7.
Yeah.
That's all they're buying.
Yeah.
And valuations there, in my view, are quite extended.
Oh, for sure, yeah. The Magnificent Four, let's call it now, because a few of them are sort of rolling over a little bit. We'll see. So lastly here with the investment case, Rudi, so just some rough math. $10,000 put into Seabridge when it went public, and if you just sat on it and did nothing, you'd be looking at about $650,000. Not every company can say that and have that kind of return. So wrap it all together for us in terms of the investment case going forward for Seabridge.
I'll try to make it simple math. So if you look at all of our metal, all of our copper, gold, silver, and molybdenum, and you total up the value of in-ground resources, it's over $6,500 per share. Our shares today are trading at 11 and change US. We have built-in optionality and leverage just to higher metal prices just by the metal we have in the ground. We've hit the high 30s in the share price twice in our history. We're now trading at multi-year lows. And I do believe that the price of gold is going to continue to go higher. I like copper pricing going forward, and I like silver pricing. So if you're looking for optionality and leverage to higher metal prices, this is one-stop shopping.
Right. And it just, again, lastly, is part of the issue market just not getting it or not understanding it, even though you have been around for a long time? Because, there's such a disconnect between what you just said there.
Yeah, I think a lot of it has to do, quite honestly, is we have been talking about a joint venture for many years. It hasn't happened yet. There's skepticism whether it will happen. I'm taking the other side of the bet. I believe it will happen. We're running a formal joint venture process now with RBC Capital Markets. Last year, they brought more than 5 companies, largest mining companies in the world, through the project doing due diligence, and we're in dialogue with a number of those companies now specifically on a joint venture. So I believe when a joint venture happens, it's a binary event, and more focus will be at Seabridge, and the share price will go higher.
Right, and clearly you're waiting for the right time. You haven't wanted to rush this over the years.
No. No, we haven't.
No.
Timing is important, and right now you're looking at a world where the big copper companies need new projects. That's clear. The big gold companies are running out of reserves. They need new projects as well. So I think our timing here is spectacular. And then on top of that, the de-risking we've done, we now have a project that's permitted. We have hooking up to cheap hydropower through BC Hydro, and we have a project that's very capital efficient from a return on investment.
Great to talk to you, Rudi. Thank you.
Great to be here. Thank you.
Okay, Rudi Fronk, Chairman, CEO of Seabridge Gold.